What's up, YouTube? Going to talk about the latest results from Tesla. Ticker symbol TSLA. This is a company that's already kind of had an extended move here. You call it maybe the coronavirus low. And this stock has really rallied since March. And we're seeing after hours here, the stock is up another 8% after being up 4% today. So this is a huge move, already a very large company. So what I did is I came to Tesla's investor relations page. You can search Tesla IR in Google and it'll take you to this page. And I essentially came to this Q1 update here, and it brings us here. So this page essentially has some some highlights here, but we're going to just jump right into the numbers here. So what this chart is, what I always like to do, see what we're dealing with. These figures are in millions, so you need to add about 6 zeros here. This is a quarter over quarter over quarter over quarter over quarter kind of view here. I actually like this. It kind of gives you a nice broad look. Some companies don't give it to you like this. I really like this. So what we see here is a quarter over quarter. That's going to be this figure here, the difference here. And then we've got a year over year column here. That's from this quarter back to Q1 2019. So we're in Q1 2020, obviously. So here we go. Automotive revenues, as we see, declined quarter over quarter, but I think some of this is expected. Obviously, we had the coronavirus in China, which is a big market for Tesla. And so they were affected kind of in that January and February and probably a little bit of March as well. Whereas the US really didn't start seeing an impact from that until maybe late February, early March. And so definitely something that you can expect here. Investors probably expected, but year over year, it's a really nice number. We're seeing a 38% growth in terms of automotive revenues from one quarter to Q1 19 to Q1 2020. That's solid growth, guys. When it's a high flying stock like this, you need this mid 20 to mid 30 digit growth to really propel that. And that's exactly what we're seeing here. We're seeing this is cars with regulatory credits. These are winding down in most states, but it looks like maybe they picked up again here in 2020. You'd have to check with your state and different, municipalities to see how these apply. But this is not a huge number considering how many cars that they're producing. Again, these figures are in millions. Automotive gross profit, we're seeing steadily increase. Obviously, we had a quarter over quarter decline, but year over year, huge gross profit number. And then here's the gross margin, which is really impressive for an automotive company. This is why Tesla tends to get this high valuation in comparison if you want to look at Ford or GM or maybe even Toyota. This, mid 20 or low 20% margin. And look, it actually jumped up. It's the highest it's been in 4 quarters. 25.5% margin. That's really impressive for an automotive company. Really impressive for almost any company, but especially one that a manufacturer of cars. Total revenues, as we see, again, decline month over or quarter over quarter, but then we saw this nice little solid 32% jump year over year. Total gross profit, again, 118% growth year over year. That's really impressive. And again, with the coronavirus, only off 11%. That's not bad at all. This is showing you, again, total GAAP gross margin. This is general accepting accounting purposes. So this is by the book, essentially. So we'll talk about that a little bit more in a minute. So we've got operating expenses here. This is really impressive too. Okay, yes, the top line numbers up here are pretty nice. But man, look how this company is scaling. They're achieving year over year growth of 38%, and they're increasing their gross profit 118% in large part because look at these operating expenses. They actually went down. Operating expenses, again, you actually want this number to go down if you're a shareholder, especially when sales are rising like this. Down 13% year over year. This is showing this company is incredibly efficient at making cars and doing what it's doing. So this is really exciting if you're a shareholder. Loss or income from operations. So a loss would be in parentheses. Actual positive number would not have parentheses. So here we go. 283 million. That's up huge since Q1 2019. It's down just a little bit, down quite a bit from Q4, but definitely not. It's not out of range. This is not completely out of range. It didn't slip to a loss or anything like that. Operating margin again. It looks like they consistently hit this kind of 4 to 5% range here. And so, totally reasonable here for Q1 and obviously a huge improvement over Q1 19. Adjusted EBITDA, this is earnings before interest, taxes, depreciation, and amortization. My business school has paid off for me. Now, we'll talk a little bit more about this adjusted number and whether or not you should pay attention to it. Really, all it really factors in is stock-based compensation. I don't want to say that's only, but that's probably for a company like Tesla, the most significant thing that it counts. So we have kind of like the net loss down here. This is GAAP. Again, this is by the book. This is how the SEC and how all companies are judged on. And then a lot of companies throw in this adjusted number here. So as you can see, it's not very impressive. If you look at their net loss or income, 16 million in the quarter, that's not a lot of money. But if you adjust out some of the things, which is a primarily stock-based compensation, they get to this 951 mark. So that's obviously far more impressive and far more in line with the last few quarters that they've had. But even if you go on a GAAP basis, they were at a huge loss, really big loss, and then it started turning positive. And even with the coronavirus and stuff, it's looking pretty good. Here we go. EPS, this is earnings per share. Obviously, that has turned positive as well over the last few quarters. And this is using the adjusted number here. So this is, excuse me, I'm down here at the EPS. So we got a 9 cent per share earnings here. This is kind of the adjusted number, gives you $1.24. Which one you look at, which one you decide to I would look at it all in totality. Again, this is for me the most important thing on this page is we've got year over year huge growth on the automotive revenue side, on the total revenue side, but even more impressive, we're driving operating margins, operating expenses down. This is driving margins, gross margin, and GAAP margins up. This is really, really impressive. If this trend continues, don't be surprised if this stock maybe breaks above this high that it made, looks like earlier this year, kind of in that $915 range. So really, 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 really impressive. So we've got net cash used in or provided by operating activities. Notice it did go negative in the quarter, but what I want to point out is it was negative back in Q1 here. So it could be that maybe Q1 is a kind of maybe an investment cycle for Tesla. And then Q2, Q3, Q4 is kind of, generating cash flow. We'll see if that's the case going forward, if that's the trend. But notice the capital expenditures here staying relatively flat, kind of quarter over quarter here, at least these 2 quarters. But it is up quite a bit over here. But again, a growing company, you expect them to invest in new buildings and new operations and things like that. Free cash flow, again, turned negative in the quarter, but as we saw, it was negative a year ago, so it's not much change from a year ago, so that's kind of interesting. Cash and cash equivalents, this has steadily rose, not necessarily, again, not because they're generating free cash, but as we'll see in a second, they actually raised money by issuing stock, which is typically what a lot of these younger companies do. So this is being bolstered not necessarily by operations, but by issuing stock, which is a negative. If you're a shareholder, you're essentially being diluted. But if the company keeps performing these kind of top line and then operating efficiencies, it shouldn't really be a big deal unless they really do it. So you can see here, cash, like we just talked about, it was driven mainly by a recent $2.3 billion capital raise, which is essentially either maybe a loan or maybe through issuing stock or maybe a combination of both. They kind of go into, more of a financial summary, kind of giving you further details there if you want to read that. Here we go. More operational summary. Again, this company sells cars and they have the solar thing, which was really kind of a disaster, but a lot of investors have left them off the hook for that. kind of debacle of an investment here. But as you see, we'll jump down to the solar. Look at this. This business is declining pretty rapidly. That's a disappointment. If this business was really doing well and flourishing, then this stock could be at the moon by now. But this was probably a poor use of capital. But again, investors have left them off the hook for that. Model S and X production. This is they're more expensive cars. 80, 90, 100, $120,000 cars, maybe even more expensive than that. I can't afford one, so I'm not going to be buying one anytime soon. So quarter over quarter, again, we see here they went down, but year over year up relatively a little bit. Again, this is a high-end car, so it has its market. Now, its bread and butter, as we've seen, is this Model 3 and this Model Y car. So it's grown tremendously, almost 40% year over year, here to here. Quarter over quarter, it was flat, which is actually fairly impressive. Again, if you factor in China had the coronavirus outbreak, they've been dealing with it since late last year, and the U.S. has been dealing with it kind of in the tail end of this Q1, which is January, February, March. So, this is pretty nice. Imagine if you didn't have that issue going on, which is kind of hard to believe, but if you didn't, this number might actually have grown quarter over quarter, which would be fairly impressive. So total production, again, we're seeing just a small decline, mainly driven to the expensive cars, the elite cars. But again, a solid 33% year over year growth on total production. As long as that number stays in that 30% range, this stock will probably keep trending upwards. Again, as long as they keep capital expenditures and things like that in check, which they do seem like they're doing. Deliveries. So we're seeing this is what they produced. This is what they delivered. And then same here. Here's the cars they produced. Here are the cars they delivered in those models. And then we see total deliveries. Again, total production, total deliveries. And then this is kind of interesting. Global inventory. We're seeing days of supply here. So 30, 18, it looked like they were trending down here and it kind of ticked back up. Looks like they have a footnote here. It says at the end of Q1, we were unable to deliver cars at a normal pace, again, likely due to the virus and things like that. But we're seeing a quarter over quarter. They actually want to see this number probably trend down. It has trend down year over year. That's a positive. I would be excited about that as an investor. 20 days of supply doesn't seem like a tremendous amount. It's probably, you could go look at Ford and Toyota if you want to analyze this number a little bit more, but off the top of my head, doesn't seem too bad at all. Solar deployed, again, we talked about this business. This is a declining business. This is a business that doesn't really make, a big impact onto this company. We've got store and service locations. We got supercharger stations. Again, these numbers you like to see tick up. This is actually the moat of the business. Not necessarily the store and service location, but these supercharger stations. My brother actually has a Tesla. And these superchargers are very important to owning the car, because if you own one of these elite cars here, I think you get free charging. And even if you own one of these Model 3 and Y ones, being able to charge your car at one of these supercharger stations. Does Ford have any supercharger stations? Does Toyota? Does Lexus? Does Mercedes? I don't think so. At least I've never seen one. And the fact that, again, these figures are probably in millions as well. So that's pretty impressive. And this is kind of one of the moats around the business. Here they're talking about vehicle capacity. Obviously, a company like this they have operations over in Fremont, in Shanghai, and in Berlin, and they're kind of talking about the constraints that has. So I think they, at one time, only were making cars in Fremont, and now they're making in Shanghai, Berlin. Expect this number to keep growing. So expect capital expenditures and things like that to grow. But again, if demand is there for the cars, you definitely want them to continue to do that. Here's the core technology. Again, this is the moat around the business. If you've ever been in a Tesla and driven one, the software and the interface and the self-driving, and I think my brother was telling me it's going to stop at red lights and stop at stop signs and things like that. I thought that was pretty impressive. I've driven one with the autopilot on, and it's pretty impressive. And I have a Mercedes. My Mercedes is brand new. It does not do this. So very, very, very impressive. Talk about their battery and powertrain. The battery and being able to produce those is a huge moat around this business. We're kind of talking more fundamentals here, but it is kind of impressive. Here's a solar roof. I actually thought this was kind of neat. Again, this is a minor part of the business, but just from a general standpoint, that roof actually looks pretty slick. I just put a new roof on my house a couple years ago, so I won't be doing anything like that. But if you need a new roof, not a bad option, I guess. So outlook, they're kind of talking about things here. Again, this is more fundamental stuff. I do kind of want to get into, there's some more financials down here. We'll get there in a second. Here's a look at their gigafactory in Shanghai. That is really impressive. That looks huge. Here's more looks at it. Looks like it's under production. This is very, very, very impressive to me. Here's again, more of talking about their moat. Here's like a figure of their car. They say there's 70 pieces, and then here's the Model Y. It has just 2 pieces. That has to be more efficient and easier. This is where they're driving down operating expenses. Instead of putting together 70 pieces, now it's only 2, and they say eventually a single piece. That's pretty incredible if you ask me. I'm not a structural engineer, but it has to be pretty cool. Again, here's 70 pieces of metal. Here's 2. That has to drive down cost and efficiencies. Here's things from a graphical perspective in terms of, deliveries and other metrics here. If you like looking at graphs and things like that, maybe you can't understand the numbers or you just want to visually see them. Here they are. And I tell you what, when the stock's kind of going like this, you better turn to the financials and see them going like this. Otherwise, something really weird is going on. Net income, you'd really like to see this pop up. But again, this is net income. This is probably on a GAAP basis here. So I'll explain a little bit more here in a second. So here's a statement of operation. Again, this is kind of going over what we just went over. This numbers are in millions. We've got a Q1, Q2, Q3, Q4, back to Q1 new year here. We've got automotive sales kind of coming down to this total revenue line here as well. We've got cost of revenue. They're kind of showing you a little bit more granular details than what we first went over. Here's research and developments, selling and general administration. It's impressive for a company that is innovating as quickly. Again, I know somebody that, a close family member owns one of these cars, and they're always telling me about the new software. Well, here's research and development. This has actually stayed pretty consistent. So they're innovating without having to really break the bank in terms of, more of this. Okay. Selling, general and administration. This is a company that doesn't run ads on TV. You watch a Super Bowl or watch a football game or something, and there's a Chevrolet ad and a Ford ad every commercial break. Well, Tesla's not doing that. So, we know that's not kind of derived in here, but, and imagine if it was, these numbers would be much, much, much larger. So that's pretty interesting. And these have stayed relatively the same as well. So again, total operating expenses have stayed the same, if not gone down. Guys, that's super impressive to me. Got a little bit of financial stuff, interest income, interest expense. Again, people will say, oh, well, Tesla borrows this money. Well, look how much they're paying in interest. It's not an insignificant amount of money. Again, this is in millions, but when we're talking about up here, the total revenues, this is just for a quarter, that's not that bad. You made 4.8 billion and you had to pay 170 million in interest. It's really not that out of whack. Coming down here, we got some, net income. We drive down to this net income line here. Let's see. I'm trying to line it up here. Here we go, right here. And again, this is on a GAAP basis. I will run through here. Again, here we go, the per share data and things like that. Weighted number of shares. This is something you kind of want to keep an eye on down here. In terms of, a shareholder, how big are they diluting you? They are diluting you a little bit. Look, we had 173, I guess this is 173 million shares outstanding. Now it's up close to 200 million shares in terms of the diluted number. So they, again, they're issuing shares to employees, they're issuing shares to raise money, but these things can be ignored if you're growing the company very quickly. Here's a balance sheet. We're looking at cash here. We're looking at inventory. We're looking at accounts receivable. We're looking at property, plant, and equipment. Typical balance sheet stuff. This has stayed relatively constant. We're steadily climbing. That's exactly what you want to see. On the liability side, this is not getting completely blown up. It's not completely out of whack, so it's not that bad. And then also you see on here stuff like customer deposits. Well, you think, wait, that's actually an asset. Well, this turns into an asset when they deliver the car. So that's, you have to factor that in when you kind of are analyzing these numbers. Sometimes the liability is not necessarily, like cash you owe your landlord or cash you owe your credit card company. It might be that cash you've taken in and you need to deliver something in order to recognize this as an asset. So one interesting note there that you might be able to learn from. Moving along, let's just kind of come to the statement of cash flows. What I want to come here is, more importantly, I think, here's from GAAP to non-GAAP. So again, GAAP is this generally accepted accounting principles, I think is what it stands for, and non-GAAP. So here we got net loss. This is GAAP right here. We had this $16 million mark. Well, look at this stock-based compensation. So they're showing you here this stock-based compensation expense was $211 million. So, and stock-based compensation is not Tesla pulling out their wallet and taking cash out. It's actually they're issuing shares of the company, which again, if you're a shareholder of this, you are getting diluted in some sense, but it is not actually cash coming out of their, Bank of America account, for example. So they, from a GAAP perspective, from the way they teach you in accounting school, they made $16 million. But if you factor in, okay, wait a second, some of that is not actually cash, and that's what the stock-based compensation is. So they're adding that back in here, so you get to this 227 number. Now I'll let you decide what you want to do there. Do you want to analyze the company from this 227? Do you want to analyze it from this 16? Or what I like to do is somewhere in between, because again, like I said, this stock-based compensation expense, this is not cash coming out of the pocket of the company, but it is diluting you a little bit, just a little bit as a common shareholder. So it's something that you want to keep in mind. Again, they do it here from a earnings per share perspective. We earn 9 cents. We had $1.15 in stock-based compensation, so you can add that back together, and we get this $1.24 number. So moving through the rest, just kind of standard stuff, and then kind of boilerplate information down at the bottom. Just wanted to run that through you. Again, Tesla just announced their Q1 monster quarter. As we've seen, they've been on this monster run since, again, this kind of coronavirus low went all the way down to 361, kind of hit this, kind of support level here. Some demand came in for the shares here, and then boom, all the way back up to 800. And then we'll see likely tomorrow follow through on that, maybe up towards that $900 level, which is close to an all-time high in Tesla. Hope you enjoyed the video. I do not own any shares of Tesla. Do your own research for any stocks that you want to have. Leave me a comment. Hit that thumbs up button. Thanks again.